Welcome to CoinVantage, your go-to channel for simplified insights into the world of cryptocurrencies. Whether you're a beginner or an experienced investor, we're here to make understanding crypto easy and enjoyable. From straightforward tutorials to the latest updates, our aim is to empower you on your crypto journey. Subscribe to CoinVantage and let's explore the exciting realm of digital assets together. Welcome to today's online tutorial, where we'll explore the ins and outs of crypto staking. For those new to online crypto trading, figuring out how to predict coin prices can be quite a puzzle. Over the past week, some coins gained significantly, while others took a hit, making it tricky to grasp income generation methods. One way people use to make money with a certain level of risk but relatively low is through staking. Staking means locking up your coins for an extended period, letting you earn an annual return of around 2 to 3%. Let's dig into this further. Check out Coinbase's website, where they clearly mention a maximum yearly percentage yield of 6% on your cryptocurrency. Whenever you come across a site offering opportunities to earn, make sure to look at the annual percentage yield. Your APY is the total amount you'll get annually. The term annual means a yearly proportion, showing the percentage of yield or return you can expect. For those with funds in a crypto account, unsure about trading due to potential losses, or seeking a secure place for profits, Earn is a solid choice. This platform provides a lower risk environment, giving you a calculation of your projected lifetime earnings and showing your average rate of earnings over time. Rates vary based on the chosen coin, underlining the importance of knowing the specific coin you pick. Let me show you a low risk option: the USD coin, a stable coin with a projected reward rate of 1.5%. Essentially, this means you'll get an annual return of 1% on your investment in USD coin. Taking action against inflation is crucial, as the value of money decreases by around 6% annually. Ignoring this could result in a net loss of 6%, emphasizing the need to grasp this aspect. For those curious about making money in this specific way, it's clear that staking additional coins leads to higher earnings. An interesting part of this system is that it allows users to stake specific cryptocurrencies like Ethereum to get rewards. The market's upward movement corresponds to an increase in your yearly percentage rate. By staking your Ethereum, for instance, you have the chance to earn an annual dividend of up to 3%. You can see this in action with a 30-day comparison showing an 11% increase in Ethereum's value. While some may be skeptical, I personally would not trust 3 specific websites for such transactions, including Coinbase and Binance. Binance stands out as it guarantees the return of the same quantity of tokens entered into Simple Earn, along with yield paid out in the same type of tokens. Different sites have different terms and conditions. With Coinbase, one notable advantage is the ease of staking your assets. It's simple, secure, consolidated, and straightforward. Note that specific websites have specific lockup periods for assets. For instance, securing $10,000 worth of assets and locking them up for 60 days effectively immobilizes them, as Coinbase uses them for transaction validation. Certain coins like Axie Infinity on Binance exhibit varying rates, with a rate of 30%. It's clear that the longer the duration, the greater the annual earnings, regardless of the output type. As discussed earlier, you have the option to choose Binance Coin based on your preference, reducing the duration, such as locking it up for 30 days on a simple basis. Yields a 2% return. The advantage here lies in the availability of calculators, allowing you to determine the desired quantity. Suppose you have $5,000 and want to convert it into USDT for a straightforward profit. Here's a projection of your investment growth over 3 years. Illustrating the functioning process, this conclusion is solely derived from a single year of data. Indeed, an investment of $1,000 would yield a return of 138 USDT after a year, with compounded interest rate of 3.6% plus an additional 1.5%. Generating effortless passive income from this is certainly feasible. A lot of people are curious about buying nodes. From what I've noticed, many folks want to try trading, but here's an interesting twist. Even if you have some extra USDT just sitting around in your account, or you're not planning to trade this year, you can actually make a cool $600 for free, and I'll convert it from your cryptocurrency. The risk here is pretty low, and remember that your $600 you earn kind of keeps up with the inflation rate, which is a good thing. earn. If you check out traditional finance accounts like Chase, they might give you around 1% cashback. But guess what? The screenshot I'm showing you here says their yearly earnings rate is 3.1%, and on top of that, another 1.5%. That's way better than what regular banks offer. Now, I won't go as far as saying this is better than your typical bank because crypto is still a bit wild and unregulated. Exchanges, including big ones like Binance, could crash suddenly. Remember back in January when some banks went under? So, you gotta be ready from some risks, especially with these crypto tokens. I'm not saying they're bad, but you need to know that crypto involves some risk, and tokens might not always do well. If I were to invest, I'd go for tokens with a good track record. Personally, I'd go for Cardano, USDT, Ethereum, and Binance Coin. These have higher APRs because they come with a bit more risk. You can subscribe for 7 days, and it depends on your preference on how you want to do it. But just keep in mind that not everyone knows about these opportunities. There are tons of ways to make money with crypto. If you want to make sure your money doesn't lose its value when it comes back to you, it's smart to pick a coin that you think will go up in value. For example, if you spend $1,000 on a token, when they give you your money back, you'll just get the tokens. So, if you had 1,000 AVAX coins, they'll hand you back 1,100 AVAX coins. Don't end up with a bunch of worthless tokens when you get them back. Choose a coin that's got potential. This is crucial if you're thinking of a long-term investment in your cryptocurrency world. If you're not sure, use a calculator to figure out how much UST you might earn. Check out the potential earnings for each coin like AVAX and what they offer. You can even do a search. For me, that's the most valuable token, so I decided to give it a shot. They offer only 0.42%, but hey, it's something. After that, you just pick the token you want to subscribe to. Maybe something like Fetch catches your eye. Simpler earnings are the easiest to handle, and you can take them out whenever you want, especially if you're just starting. Binance is good for beginners in my opinion. If you're just starting, I also recommend Coinbase. Stick with the stable coins at first, and if you're familiar with the coin or have a certain currency, maybe check out KuCoin or another platform for more options. Once on Binance, use their tools to figure out how much money you can make with cryptocurrency. Pick the currency you're interested in, see if it's on sale, and then just hold on to it for a while. Make sure it auto-subscribes. Exploring the crypto world can be interesting and profitable. Whether you're new or experienced, learning about ways to make money like staking is important. If you want to stay informed and understand crypto better, subscribe to our channel, CoinVantage. We share easy-to-follow tutorials and keep you updated on what's happening in the crypto space. Join us in CoinVantage for a simple and empowering journey into the world of cryptocurrencies. Happy investing!